Welcome back to Investing with Confidence. As always, I am your host, Joshua David, having a good time talking about the do's and the don'ts of the financial markets, how these markets are soaring once again, especially cryptocurrency, and how us as retail investors or the public can utilize these for income potential. If you happen to miss this investing class that we're doing virtually, you can just text the word invest to the number 484848. You'll receive a text back with a link. Or you can just go straight to that link if you're online. Go to otamin.com. That's OTAMINN.com. These classes are virtual or in person right here in Bloomington. If you're just tuning in, Al was shedding some light on how the markets function, how we need different techniques and strategies for all market conditions, but we're seeing a lot of crazy things happening in these markets, especially with over in California like he's talking about. But how do we really take advantage of these markets and have the potential for extra income is what the public is looking for. I mean, think about this. What would you do if you had another source of cash flow? What would your life look like? I mean, you have to have the potential to do different things. And, some people want to be able to take vacations. I know summer's over, but you know what? Winter vacations are coming up. People are looking to upgrade or enhance their life, right? But it's how to use your capital and have that work for you, and have the potential for some of those things. So, Al, I ended that last segment about how Wall Street does that. How Wall Street is taking $100, turning it into $200, taking that $200 and turning it into $400. There's techniques and strategies that they're using, right? Mm-hmm. But the good thing that we know, and you were talking about this earlier, is we want to trade like them. We want to trade like the Wall Streets, the Buffetts, the big banks. We call it the smart money. You have to have a strategy that has consistency to do that, to follow, and that's designed to follow them. Talk about that strategy. Talk about some of those different perks that they have. But these techniques and strategies, heck, they're available to us as well.
Well, they are. And unfortunately, most people are, if they have any kind of education or knowledge of the financial markets, it's stock or mutual funds. And for most people, it's mutual funds. That's what they are in. If they've gone to an advisor or if they have a retirement account, it's mutual funds. That's not what the institutions are investing in. That's certainly not what the hedge fund managers, with people like Warren Buffett, are investing in. They're using other assets. And like Josh mentioned, these are assets that are available to all of us. And there are things like, in addition to stock, there is the options market. There is the foreign exchange market, the Forex market, and there is the futures market. Those are markets that have leverage, which is what allows you to take that dollar and turn it into $2 or $3, or not necessarily turn it into it, but have that $1 control $2 or $3 or $50 or $100 worth of something.
That's how you have that potential.
That is leverage. And the institutions are using it, but they're not, for the most part, teaching their clients how to use it or putting their clients into those assets, because they are pretty much by nature short-term vehicles. By that, I mean that you get into a position and out of it in a relatively short period of time. It could be a day, could be within an hour, could be a couple of days or a week or so. But if a financial advisor that has 200, 300, 400 clients, and they're all trading short term, and that advisor is responsible for giving them suggestions, that it's not possible. The time just is not there to do that. It's much easier for them to turn your assets over to somebody like a mutual fund manager, and then they go out and they gather more assets to turn over to the mutual fund manager. The mutual fund manager charges you, and the advisor charges you. So you're paying a couple of fees there for things that pretty much over time have been mediocre in their return.
That's those F words we do not like to see. We don't like to see fees.
Those are fees. Yeah, we want to make sure we cover what that F word is right away.
This is a family show.
It's fees. And people, I think, just have been conditioned to think, I've got to pay somebody to do this for me. And they're thinking, well, that is true.
You don't have to.
That's true. You kind of jumped the gun there for
I know.
what I was going to say. But the impact of fees, if you think about it, if you're paying somebody a couple % a year, that's money that's no longer there compounding for you. And over the course of your working years, that might cost you 50 to 75% of what you could have in retirement. That's a big number. 50%, 75%. We're talking about maybe several $100,000 for some of you, maybe millions of dollars that are gone, that have been taken or siphoned away from you by somebody who is basically putting you into relatively mediocre return investments with exposure to bear markets. And that's 20% or more. Back in 2008, a lot of people found their portfolios going down by 50-60%. That's hard to come back from, especially if you're just going into retirement or you just retired. So the assets that the big money, the smart money is using, those are available to us. Not only can they be used for your short-term income cash goals now, but when you go into retirement, the income strategies are important to use in retirement too. And the way that you really approach your wealth bucket as part of your financial life and your income bucket, they're different. The ways that you invest in them are different, and that's what we show our students. Know how to use the right assets and strategies for what you are looking for. What are your goals? What's the time frame of those goals? And then find the appropriate asset to help you achieve those goals in the most effective way possible.
And just to give an example of what I was talking about, when you're being put into a strategy that's a buy and hold as it goes up, I mean, just giving a small example here, a little snippet from in 2021, in January, price went up about 5%, came back down 4%, went up 7%, came down 6%. So if you do the math there, Alec, do the math for me quick here. You got 5, you got 11, about 25% potential, but the public is only getting 3 or 4 of that.
Correct.
So that's the problem, is you got to have a consistent strategy that for up markets and down markets within that long term. There's a potential there. You just have to understand and learn a strategy that's designed to have the potential to follow that. And if you want to learn more about that, what is a strategy that has consistency and the potential for following the market, not just hoping it just goes up, you got to come to one of these investing classes and see what that strategy looks like, see what the potential could be. We do these classes online. They're about 45 minutes. You can just text the word invest to the number 484848. You're going to receive a text back with a link. The link is otamin.com. So if you're on a computer, you can just go to otamin.com. That's otamin.com and register for this class. We do them virtual, 45 minutes long. You can do that, or right in person, right here in Bloomington. So we have them physical as well. Actually, Al teaches these, I teach these as well. So come and see us in these investing classes and get more of a hands-on if you're that type of person, or just go virtual if you like that as well. So Al, there's some people that are looking for that income potential by using the financial markets. That's an opportunity that people have. Mm-hmm. But a lot of people have a full-time job and say, I have a full-time job, I can't do this. How does somebody have a full-time job and still be able to get into the market because of these different perks with these other asset classes?
Well, that's one of the ironies, I guess, of working with a financial advisor, is that they're not telling you about assets that you can trade 24 hours a day. So, and really, they don't want you to be trading. Their goal is to have your money managed by somebody with a kind of an ongoing fee that they can rely on. But if you want to take control of your assets, and I'm going to talk in a second here about why that's so important. If you want to do that, there are ways of doing it that can provide a much greater potential return for you, and something that you can do within the time frame that you have to deal with it. If you have a full-time job, it's hard to pay attention to the stock market, which is only open 6.5 hours. Futures and Forex trade Forex 24 hours a day, futures 23 hours and 45 minutes. Cryptocurrencies never closes, 24/7.
Opportunity.
Great opportunities there. But why would you maybe want to look at the financial markets? This is a fact. The wealth gap has really widened during this pandemic. We have a much greater wealth inequality in this country now. And here's the reason. The primary reason is that the wealthiest 10% of Americans own about 89% of all stocks. And over 70% of the top 1% of the people in this country, their wealth gain over the last year and a half during the pandemic came from stocks in the financial markets. So, and these people understand that it's important to have multiple sources of income that don't require a big investment of their time. That's what we're providing for our students, is the ability to understand assets and strategies that are available more than just during the stock market, that have return potential much greater than you get with your mutual funds. But also, what about protection? Think about this. Ask yourself this, or go ask your financial advisor, what are they doing to protect your assets? We had a great bull market, but at some point in time, the market will correct. It will correct or will go into a bear market. It always has done that. Back in 2000, people were riding the dot-com bubble, the internet bubble, thinking that would never stop. Boom, all of a sudden, the market rolled over, went down 50%. Then people got into the real estate market. Mortgages were at extreme low levels, and then they reset at higher levels. But people were buying properties, flipping properties, thinking that this was the greatest thing in their life. And then 2008 hit. Boom, the market rolled over. It was down 57%. These things happen and will happen.
Hey, Al, real quick there, as you're talking about that, we were talking about strategies for up and down markets. There's an opportunity with down markets, right?
Well,
Talk about that.
There's a bigger opportunity in a down market because it goes down faster. But if you're not protected, if you don't know how to protect the assets that you have, both your initial investment and your profits, you're not going to do well. And this is the fact. Preservation of capital is the first goal. Making profits, that's the second goal. A lot of people maybe don't know who Jesse Livermore is, but he was a famous trader back in 1929 when the market crashed. He made $100 million. And he said, this is one of his quotes, "The pro concerns himself with doing the right thing rather than with making money, knowing that the profit takes care of itself if the other things are attended to." So it's preserving your assets, knowing how to protect them. That's the number one thing we teach our students. But then what are you going to do if the market goes down? How are you going to participate, or can you participate if the market's going down? Well, the pros do, the big institutions do, Warren Buffett does. How can you do that? Well, you can do it with option strategies. You can do it with inverse ETFs. An ETF is an exchange-traded fund, which is similar to a mutual fund. It's a basket of stocks, but an inverse ETF goes the opposite direction of the underlying stocks. So if it happens to be an S&P 500 inverse index fund, it will go up as the S&P 500 goes down. So those are two ways of making money. Shorting the market, knowing how to short, is another huge tool to be able to use in a down market. You can use, as I mentioned, options. With the futures market and the foreign exchange market, you don't have to just be long. In other words, expecting those assets to go up. You can also sell them. You're selling a contract, and you can participate when the market is going a different direction than you have been relying on, which is only up.
Yep. Just to kind of clarify what Al was talking about, I mean, as he was talking there, I was just doing the math here, and based on the S&P 500 in 2021 on a daily chart. The opportunity that was there based off a daily chart, because you have up markets, if it goes up 5%, goes down 5%, up 10%, down 3%, there's roughly about 68% of opportunity in the markets in 2021. Well, the market overall is only up about 23%. I'm going to say most of our listeners, their brokerage accounts probably aren't even up 23% because of fees. We talked about fees in the first segment. So the opportunity is there. You just have to understand those strategies that Wall Street is using. That's why they're using these. As Al is talking about, he's referring to Wall Street, the smart money. They are doing this stuff. These strategies and techniques are available to us as well. So understanding what those are is the first step. So once you understand what they are, you have to understand how to apply it, how to apply a strategy. And then what was kind of how I kicked this segment off is have consistency following that strategy that's designed to follow the big banks, follow the institutions. And Al, you teach investing classes right here in Bloomington. We also have these investing classes online. It's a workshop online to see how these markets work, how the institutions are creating returns in up and down markets. So think about that. The opportunity is there. You just have to learn those skills. So call 952-814-4410, or you can just go online to otamin.com. That's OTAMINN.com for this investing class. It's virtual, 45 minutes, or right here in person, right here in Bloomington with us, Josh and Al. So, Al, as we continue this discussion in the next segment, you know what I forgot to do? Our second rule of success. You know what it is? Trust yourself. When you have a strategy, trust your strategy, follow your strategy, and ignore the haters. When I say that, ignore the haters, there's always somebody that's trying to take you down. There's always someone to say you can't do something. You know what? Trust yourself and do that yourself. Learn those skills. Coming up next, we're going to continue the discussion, but we're going to talk more about retirement and those strategies. 952-814-4410. We'll be right back.